Joining us right now is HighTower Chief Investment Officer David Bahnsen. David, good to see you. Thanks so much for joining us. And you're looking at the election from an investor perspective. Thoughts on which candidate would be best for markets and the economy?
Well, the candidate I think who would have been best for markets is no longer in the race, so now we got to deal with who's still out there. And I think
who was that?
I was always a big Rubio guy, and I think that there were a number of others in the Republican field who would have been market-friendly candidates. But right now, the big issue to me, I think the market is largely beginning to price in the likelihood of a Hillary Clinton presidency. But the big issue no one seems to be talking about is how the Senate and how the House will hold up. That's where I think the Republican side is so important, because if indeed a Trump nomination happens and results in the GOP losing the Senate, that's a different outcome than if Hillary is in a sort of divided situation that President Obama's found himself the last few years.
So you think that Hillary Clinton winning the election would ultimately be a positive for markets or a negative?
Well, I think it would be a negative for markets, but at this point it's sort of all relative. I mean, I think that the markets have to price in which Hillary Clinton would be president. The one campaigning would be a disaster for markets. But this capital gain tax issue she has, this kind of more extreme rhetoric against some of the energy issues, fracking and so forth, is not going to happen if there's still a Republican House and certainly a Republican Senate. It reminds me a lot of the 2012 situation. The markets never for a moment thought that the Republicans were going to lose the House. So an Obama re-election didn't really disturb things because we stayed in that place.
I see, right.
But if Hillary Clinton were to become a president and take back the Senate, perhaps even the House, have a bigger mandate, I think that gives her more political capital, which could be very damaging for health care, energy, maybe even the financials.
And the broader markets as well. I mean, if you're talking about a change in House, Senate, and President.
That could be very...
Yeah, John.
We've gotten a little bit of momentum in markets in the last few weeks. As now we look out to November, is it possible for the stock market to go anywhere when there's so much uncertainty around this election, not just the presidential election, but also the Senate?
Well, it is certainly possible for the markets to go somewhere, but at this point, the biggest issue that I think will probably hold markets in place isn't those political uncertainties as it is just the valuations are playing high. But I think that the July issue is where we can get through some of that uncertainty. This Republican convention stuff's crazy. I mean, we have no idea what's going to happen. Once we know who the two candidates are, I think the markets will be able to discount that in. I don't think there's a lot of market forces right now unaware of the fact that there's a pretty high likelihood of a Hillary Clinton presidency. Should somehow Trump start getting traction in the polls, that would make it more interesting. Traction against Hillary, that is, in a general. But overall, as far as the other market headwinds, markets are pretty prone to overshoot on a valuation side, and that's what I think could very well happen.
David, besides the election, one big uncertainty that we have, of course, is what the Fed is going to do or not going to do headed into this week, headed into the meeting. Do you expect that the Fed will hint at a possible rate hike in June? And if so, what might that do to the markets?
Well, and this is kind of the thing I'm talking to clients about, as if we weren't in an election year, it's pretty much all we'd be talking about. The Fed is in this incredible pickle that if they hint, it has the effect of tightening for them because the dollar rallies and then all of a sudden they're having to kind of walk it back later. China then responds. The Fed is sort of stuck because the forward guidance is doing the tightening for them. It rallies the dollar, then there's yuan depreciation talk and all the other issues. So how they kind of go through that in an election year will be very interesting. I don't know if they're going to hint at hiking or not, but I certainly don't think they're going to hike.
I don't think they have enough information in hand right now to send any kind of strong signal that they're going to go in June, especially...
But since they've already said, look, we're expecting to raise rates twice in 2016.
Right.
I mean, here we are looking at May. Right. When do you think those two hikes will be?
In fairness, they said it would be 4 times originally.
That's right.
And then they pulled that back to 2. So if they were to pull back again, I don't think it would be.
We asked Janet Yellen at her press conference if April was on the table. And she said, yes, of course it's on the table. We're going on a meeting. Every meeting is live, right? So, and she did that with a policy statement that included no hints that there was going to be a move in April. I think they put out another policy statement now that has no hints, but they say, yeah, of course, if things get better, we can still do it.
Yeah, they're not willing to pre-commit to anything at this juncture, but I would say there's a few things that have changed to the positive from last meeting to this meeting, and that is that the labor market continue to tighten, and at the same time, financial conditions continue to ease. So I could argue that they do actually have enough ammunition to move into June, but your point is well taken. The electoral uncertainties, the Brexit uncertainties.
Yeah.
Well, not only that, but so you're saying they're going to send a hint on Wednesday, and then on Thursday we're going to get a 0.3% print on GDP. I mean, I don't think
backwards
it's
looking.
only,
And then Thursday you got the Bank of Japan meeting. There's every reason to believe the dollar rallies this week. No, I mean, this is a short-term move, obviously.
But in a way, they can't prevent it because they know they have to raise rates. The best thing they can do is make sure the dollar does not rally a lot and it moves slowly.
Okay.
So
not to
might
prevent the dollar from rallying if they're going to be talking about hinting and so forth. I mean, I think you're right. Conditions improved. Maybe June comes back on, except for why did conditions improve?
Yeah.
Because they peeled back their rhetoric. So they're just sort of in this catch-22. Ultimately, we've said for some time, it's going to be real inflationary concerns that actually drive them to act, and those could be 6, 12 months off.
They'd
We'll see
rather
about
be
that.
late than
Well,
early.
look, by the way, look at where oil
early.
is, looking for inflation. Just pointing it out, oil has rallied huge in the last 3 or 4 weeks. David, good to have you on the program.
It's great to be on. Thanks so much.
Thank you so much. David Bahnsen is HighTower Chief Investment Officer. Make sure to